Okay, from a D2C home services company to a D2C jewellery brand, that's Bluestone, which has closed a 550 crore rupees funding round from existing and new investors, which includes Zerodha's Nikhil Kamath, Ranjan Pai, Deepi Goyal, 361 and InfoEdge Ventures, among others. The startup is month-on-month Ebitda positive. Its founder and CEO Gaurav Singh Kushwaha told my colleague Aish Anand on the sidelines of TIE Delhi's NCR Sustainability Summit. Take a look at that.
We have closed the round. Mr. Ranjan Pai, Nikhil Kamath, InfoEdge Ventures, Sanjeev Bikhchandani, Amit Jain, Deepi Goyal. These are some of the known, very prominent names who have actually joined the round. The overall round size is 550 crore as it was reported in the media a while back. So that round is closed. There's a secondary transaction that is still ongoing, but the primary component was 550 crore, which is already closed.
Where do you plan on deploying this capital?
So, at a unit level, in fact, operationally we are profitable. So August was a bit profitable, so is September and so on. But what we need to do, and as omnichannel is working out very well for us, we need to expand our presence in many cities. And there are so many cities where we are still not present. We are only present in 70 cities right now, with around 180 stores. Cities like Surat, Udaipur, we are not even there, and these are very big good cities for us. So the idea is to expand our store presence in all these cities, and a lot of capital would actually be deployed towards that. So it will go towards working capital. The P&L is strong and the P&L is already profitable. So that essentially is the plan for deployment.
Okay, and you were close to valued at 578 million last year, somewhere around that, with the last $30 million fundraise. Post this fundraise, where does Bluestone's valuation stand currently?
So last round happened at around 360 million or so. Currently we are valued at around 3600 crores.
So what is the offline-online revenue mix that Bluestone is clocking currently?
So when I look at the origination of sales, almost 80 to 90% of sales are originating online. When we are looking at where the sales are converting, almost 80% are converting in stores. The strength of omnichannel in the overall purchase life cycle is only going to increase, and hence a very strong tailwind for our business model.
So how many stores can we expect you to open by the end of this year?
By the end of this fiscal, we will be at a count of around between 200 to 220.
Okay. And the target for next year is?
Around 300.
300. Okay, all right. Also, now the festive season is here. Tell me, how is Bluestone gearing up to cater to the customers? What are your expectations from this festive season? How much business did you clock last year during the Dussehra, the Diwali season, and what from that, how much do you expect it to grow this year?
Right. So on the numbers front, last full year we closed at around 760 crores or so, approximately that number. This year, on a like-to-like basis, we are so far year to date we are growing at 100%, and we expect Q3, which is the festive season, to also be almost 100% above last year.
Okay. Now, in terms of geography, help us understand where do you get most of your customers from? What's your penetration in the Bharat market? And if you could just give us a sense of that.
Right. So what we always knew was that we were very strong in metros, and I thought that the stores in metros would actually do significantly better, and that tier 2, tier 3 would take time to kind of come up. When we started opening stores there, I was in for a surprise because those stores started performing phenomenally well. The availability of newer products, good designs, etc. is even more scarce in tier 2, tier 3 cities, and hence the demand for our stores, demand for our designs was much stronger there than what we anticipated. So some of our best performing stores are not in metros.
Okay, all right. Take us through how has FY23 been for you in terms of revenues. Take us through your profitability, and what are the plans for FY24?
So last year we grew at around 80%, and this year also we plan to grow by around 80-90% or so. So almost doubling the business over FY23. FY23, as I said, was around 760 crores. So we should deliver a growth of around 80-90%. For full year, we will be significantly better profitable, and next financial year we should be PAT profitable also.
Okay. And take me through what is the secret sauce of you being profitable, because usually consumer brands are burning a lot of cash. It's tough to be there. That's the trend that we've seen in the market. What has been Bluestone's secret sauce there?
See, I think fundamentally a lot of it also boils down to the DNA, the kind of organization you have built. So we never lost a lot of capital. So for example, last 2-3 years losses also, if you see, those are in the range of 30 crore, 40 crore, 50 crores. Those numbers which are kind of small to the scale of the business, not like negative 100% EBITDA, negative 200% EBITDA and so on. So that was organizationally built a very lean organization. Secondly, our business fundamentally, because a brand-driven business, there are investments in the beginning that go in towards building that brand. It's not very easy to establish yourself as a jeweler of choice,
Correct.
so it takes time. But once that happens, I think the ticket size in our category, the margins, etc., are healthy. The ticket size are high, and the per square feet sale in our category is actually one of the highest in the world. So I think all those result in a very fundamentally it's a very, very, very profitable category.
Not burning a lot of capital seems to be Bluestone's success mantra for obtaining profitability. On that note, it's a